Hello and welcome to today's session on payroll tasks, the change of the tax year from 2019-20 to 2021. I'm Alexandra Durrant. Payroll tasks at the tax year end. Here is a list of the tasks that need to be considered and worked through, leading up to the tax year end. First of all, we need to run the final payroll for the tax year. This is followed by filing the final full payment submission report, the FPS, and if necessary, filing the final employer payment summary, EPS. That will close down the payroll for 1920. Then we will need to consider issuing the P60s for that tax year, and then moving on into the new tax year 2021. Before we can start the new tax year, we need to update the payroll software, update the payroll records, our employees' details, and also remember that in due course we may have to report expenses and benefits to HMRC. So let's look at some of those tasks in detail. Moving towards the end of the tax year, we need to make our final pay run of the tax year, the final payroll, paying everybody up to the 5th of April. If you run a weekly, a 2-weekly or a 4-weekly payroll, there may be a requirement to run a week 53 payment. Your software will work out the 53-week payment for you, and in the tax week number, when you're filling in your FPS, you will need to enter the correct week number. So if you're paying weekly, it'll be week 53. If you're paying fortnightly, it'll be week 54. And if you're paying every 4 weeks, it'll be week 56. And that will take the 1920 payroll through to the end of the tax year. The next task we have to do is to file the final payment submission, the FPS report. This is the report, you recall, we submit to the revenue under RTI each time we run a payroll. That report has to be filed on or before payday. So you would run your final payroll for the tax year, stating the payday, and then filing the FPS on or before payday. You may mark this FPS as a final FPS by putting a yes in the final submission for the year box on the RTI submission. Your software will ask you to do this. The filing requirement for that final FPS is the 19th of April. So you may run your month 12 pay run, say on the 20th of March. At that point, you can submit your final FPS. Quite often, there'll either be corrections to be made, or there might be an amendment to a payroll for commission or overtime that's been admitted, in which case you can rerun your pay run, your month 12 pay run, and submit another final FPS, so long as you do that before the 19th of April. If you're submitting an FPS after the 19th of April, you will be making a late submission. Having filed the final FPS, you may also be prompted by your payroll software to file a final employer payment summary, an EPS. You'll recall these need to be submitted if you need to adjust the amounts being paid to the revenue. So what's running through the payroll is going to be reduced or increased by perhaps CIS deductions suffered, or maybe by claims for statutory maternity pay, or maybe you have to add in an apprenticeship levy. So you would submit an employer payment summary. Or it may be that you filed your final FPS but forgot to mark it as final. So you would submit the FPS stating it's final, so the revenue know that's the last return they're going to receive from you. If you haven't paid any employees in the last pay period, then you would also need to submit an EPS. Before you get to the end of the tax year, it is worth going through a final payroll check to make sure you've covered everything. Preferable to do this before the 19th of April so you can make any changes you need to. If you're doing this after the 19th of April, we'll see on another slide what you need to do. So looking at the final payroll checklist, you need to see whether the PAY national insurance deductions that are on the payroll agree to the payments you've actually made to HMRC. If they don't, then you need to check to find out where the difference is, reconcile and amend the final payment you're going to make for month 12. Some of the things to consider are whether, if you're in the construction industry, whether the CIS deductions you've taken from your subcontractors agree to the CIS payments you've made to the revenue. If you've made claims on an EPS to recover statutory maternity pay or statutory adoption pay, etc., or you've claimed an employment allowance, or you're a limited company and you're reclaiming CIS suffered on your income, then have you made those claims correctly on an EPS? If not, make the claim now and correct the final EPS and submit that to the revenue, and make sure you adjust the final payment to the revenue for month 12, which is going to be due by the 19th of April. If you successfully filed your FPS, your final FPS or your final EPS before the 19th of April, but as quite often happens, somebody else comes along and discovers there's a payment that's been missing or a payment that's been duplicated and you need to make another adjustment. If it's for the tax year 2018-19 or earlier, then you would submit an earlier year update, an EYU. And this EYU shows the difference between the figures you've reported on your FPS and the corrected figures. So if you've underpaid someone and you need to make an extra payment, it will just show the extra payment. However, for the tax year we're just coming to finish, the 1920 tax year, the EYU is no longer appropriate. Any corrections you need to make to a 1920 figures, once you've submitted the FPS and you've gone beyond the 19th of April, will be made in the 2021 tax year on a current FPS. So where we have an error that's found after the 19th of April and you've submitted your final FPS or EPS, as I said, the correction is made on a current year, that will be 2021 FPS. So you would run your payroll as normal in 2021 and file that FPS, and then run a second pay run and submit a second FPS showing the amendments to the payroll for the prior tax year. And you would be stating on that second FPS the payroll date that the pay correction is making. So if you were making a correction to March 20 pay run, you would run the pay run for March 20 again, but submit it on a second FPS in the 2021 tax year. When submitting that second FPS, the correcting SPS, the correcting FPS, you would use the late reporting reason, code H, which shows the revenue that you're making a correction to an earlier submission. So that clears down the reporting to HMRC on the RTI. What else do we have to do? We then are required to issue Forms P60 to our employees, and these will be issued for employees who are still working with us, working with the employer, at the end of the tax year, so at the 5th of April 20. And those P60s can be issued any time up to the 31st of May 2020. Some employers will do it in the tax year 1920, in the March pay run. Others will leave it until the April 20 pay run, or maybe in the May 20 pay run. Anyone who has left in the tax year 1920 will not receive a P60 because they will have been issued with a P45, which will give them the figures they need for gross and tax. The P60 form shows the gross taxable pay in total, splitting that into in this employment and from previous employments, tax paid in this employment and previous employment if applicable, and national insurance contributions. And the taxpayer, the employee, needs the P60 if they're required to complete a tax return. Now we need to start thinking of the new tax year 2021. We need to ensure that our payroll software is ready for 2021, which usually means downloading updates from our payroll provider, be this Sage or BrightPay or Iris or any other provider you use. As an employer, you should just be making sure that the software you're using has got the current allowances in it, the updated tax bands, the correct tax rates, updated thresholds for national insurance, which we know already, and that it is using the current rates from the 6th of April 20 for statutory payments, SMP, SAP and SSP. We also need to update our employee records by moving them into the 2021 tax year. The basic tax code, which is based on the personal allowance, currently is 1250L. Normally that would change following the budget. We understand that that will not change into 2020-21 tax year, that the personal allowance of 12,500 is to remain in the 2021 tax year. So anyone with a tax code of 1250L will remain on that tax code. When we're moving an employee from 1920 into 2021 tax year, if there are any week 1, month 1 indicators on their tax codes, when you transfer into the new tax year, those week 1, month 1 indicators can be removed. That is the only time you can remove those indicators without HMRC permission. Where you've got employees with different tax codes, HMRC will issue Form P9T, uplifting or reducing the tax codes according to the employee's circumstances. So make sure you call down from the revenue any tax codes so that the employee is paying the right amount of tax moving into the new tax year. It is worth making a note in the diary if you are required to report expenses and benefits on Forms P11D for your employees. The filing deadline for these is the 6th of July, with any Class 1A national insurance payable by the 19th of July 2020. You may want to make a diary note to ensure you don't miss the deadlines and set aside some time for preparing the information for those forms. Here I've set out a payroll checklist for the start of the new tax year, so from the 6th of April 20. Here you can check whether the new tax codes have been entered for your employees, check whether the 1920 week 1 month 1 indicators have been removed. Before the start of the tax year, read up on the new rules for the employment allowance and see whether or not claiming for the employment allowance is still applicable to you. And remember that the claim for the employment allowance is no longer automatic. You have to make a claim on the first EPS of the 2021 tax year. But be careful to ensure you can still make a claim. Also make sure you and your payroll staff are aware of the new rates payable for statutory maternity, adoption pay, shared parental leave and paternity pay. The new rate, the basic rate, will move to £151.20 a week from Sunday the 5th of April 20, and the new rate for statutory sick pay is increasing to £95.85 a week from the 6th of April 20. And a really important point here, ensure your pay rates comply with national minimum wage rates from the first full pay period after the 1st of April. The national minimum wage rates can be found on HMRC's website. And when I say they apply from the first full pay period, I mean that if you have a pay period that runs to the 5th of April, although the new rates apply from the 1st of April, the pay period to the 5th of April can be paid at the old rates, but the pay period that runs from the 6th of April forward will be paid at the new rates. As an employer, you can obviously decide to pay earlier, so from the 1st of April. So good luck with closing down your payroll for 2019-20 and making sure you start on the correct basis for 2021. Thank you for listening.